Hi, our topic for today is key 6 fundamental factors affecting FCPO. Now, besides providing you with the 6 key fundamentals factors, at the same time, we'll also inform you when to search for the information because we find that many retail find it very challenging when it comes to fundamental analysis for FCPO especially. But at the end of the session, before we end the session, we also will let you know in terms of fundamental analysis and also technical analysis, can we start with fundamental or should we start with technical analysis and what are their reasons? So let's start with our topic for today, 6 key fundamental factors affecting FCPO. Before that, my name is Ting Ting. Welcome to our YouTube channel, and please remember to subscribe to our YouTube channel and click the notification bell. Now first, before we start with the 6 key factors, I will need to do a disclaimer because today's session is only purely for education purposes. There's no buy or sell call because some of the example we might need to use the actual market to present it. Now, these are all 6 key fundamental factors. The first one will be mpob data. Later, I'm going to explain to you in details. Second one will be the export data. The third one will be refining margin. Now, the first 3, they focus in terms of demand and supply. Because demand and supply when it comes to FCPO or CPO is the most important factor. So first 3, mpob data, export data, refining margin, we are looking into supply and demand. The last 3, the fourth one will be the average cash price. This is more towards searching for the support level for your FCPO. I repeat, is to search for the support level for your FCPO. Something like as a reference. The fifth will be the soybean oil. This is our nearest competitor or nearest replacement. I'm going to explain to you what you need to look at it when it comes to fundamental analysis. And the final one will be seasonality. When it comes to commodities, it's unavoidable. Seasonality will set in. And we are going to talk into details about these 6 key fundamentals. But this list is definitely not exhaustive because at the end of the day, you still have more fundamentals factors like, for example, your duty import, export policy, your biodiesel, and even weather. We have many other things. So I only highlighted those very important, especially for beginners or some of the traders that already maybe 5-10 years in the market. And at the end of the session, as I promised to you, we will highlight whether can you skip fundamentals to start or you need to start with fundamental analysis as well. Now, the first fundamental factors will be mpob data. mpob stands for Malaysia Palm Oil Board, is the associate, in a way, is the board for Malaysia Palm Oil. So there's one of the very important data being shown every month on the 10th each month. So every 10th of the month, mpob will release many of the data, but those very relevant to retail is like export data, production, and also stocks. Stocks is not the stocks that you are investing in. This stocks is inventory. So 3 highlighted one is stocks, one is production, one is export data. So let's say if 10 is a public holiday or it's a weekend, the subsequent day or the subsequent next 2 days the data will be released. Now, where can you get this information? You can click on this link. You can provide to you because if I provide you mpob, I worry that when you go in, you couldn't search for it. So you click to this link. Then at the bottom, left bottom, can you see all the data are already available? Other than that, your brokers normally they will send it to you through WhatsApp, email, SMS. You can get it from them for free. I think many of the brokers will provide for free as well. You can check with them. These are all the factors affecting, and we need to make a decision whether export increase, our FCPO prices will be higher or lower. At least you can understand or gauge. So the first one is when your export is higher, your FCPO prices should be higher or lower. So this will look into demand and supply. So when the demand is high, so the price should be higher or lower. So you think from the perspective, for example, when it comes to trading, we have about 70 to 80% of the investors, they are guys. So let's say, for example, if there's one girl, many of the guys go after this girl. So in a way, the value of this girl is higher. Am I correct? I think with this layman example, it's easier for you to understand. So look at the demand and supply. If your demand is higher, definitely your price should be higher. If your supply is higher, your price should be lower. So if your export is higher, meaning that is your demand is higher, then your CPO price should be higher. Now the next one is your stocks. Your stocks is higher, meaning what? Stocks is your supply. So your supply is higher, your CPO price should be lower. Now the final one is the production. Imagine, for example, if let's say iPhone, let's say for example, they overproduce, meaning what? They are going to let go it at a cheaper price. So in a way, your CPO price should be lower. So these are the factors that they are going to release every month on the 10th of each month. So I repeat, you can get it from your brokers, or even you can get it on the website, or even you can get it through mpob website as well. Now, second factor is about export data. Some of you will start to question, the previous data also export data, this also export data. This is slightly different is because they release the data more often. After the 10, every 5 days, they'll release the data along the way. So on the 10th, 15th, 20th, 25th, and on the last day itself, it can be 30th, 31st, or even 29th, 28th. These are all the export data that will be released in the market. So for example, in terms of export data, we have in Malaysia, two main one will be, one is the MSPEC, another one will be your SGX. They are the cargo surveyor. How to explain about cargo surveyor is something like layman terms, it's like our postman. When they send a letter, let's say when they try to deliver the letters to Selangor, KL, they'll know which area people is going to deliver the letter more, or the residents higher. So something like that, something in tandem with that. So these will be provided on the 15th, 20th, 25th, on the last day itself by cargo surveyor. You can check it out from MSPEC, even from SGX, or even from mpob. So these are all the data will be provided. So you can get those updated data instantaneously. Now, when it comes to refining margin, what is refining margin? Maybe it's a bit difficult for you to understand. Now, if I'm going to explain the layman terms, it's like, for example, assuming I love nasi lemak a lot, I'm going to sell nasi lemak. So let's say if I'm going to sell one packet of nasi lemak at the price of 5 ringgit Malaysia. So assuming I'm going to buy those ingredients like rice, chicken, fish, this all cost me $2. If I can sell out at $5, exclude my time cost, I managed to make a net profit of $3. Am I correct? So let's say if subsequently I notice that $5 every day I'm going to sell it out, I'm going to increase to $6. So my net profit will be higher. So when your profit is higher, it will encourage you to do more, to sell more, to prepare more as well. So when it comes to crude palm oil, it's the same thing. They need to reprocess. They need to process. So it's like refining. In a way, the terms is called refining. Then subsequently, they are going to sell it out. So when the refining margin is higher, it will encourage them to, in a way, to refine more. So what is the refining margin formula? It will be Olin minus crude palm oil. Where can you get this information? The price, you can get it from mpob website as well. So from there, you'll understand what are the prices, etc., and what is the refining margin. You can jot it out by yourself every day. And when the refining margin is getting higher, you give the necessary support to our CPO price as well. Now, the fourth factors will be average cash price. Now, this average cash price, you are going to take from where? You're going to search it from the mpob website as well. So this is the website. And from the website itself, from here, you can get the price. So how does it look? Can you see all the prices? No, the prices might not be really very accurate because there are so many transactions being carried out day in, day out. But I'm not going to complicate you. You don't really need to understand about that. But at least you can get a guidance or a benchmark or a reference towards what you are going to calculate. So what you need to do is you can take the past average 2 weeks price, and you are going to minus it about $20 to $30, and that should give you a support level for your FCPO in a way. So these are some of the segment or some of the calculation that you can look into it, and this should be the support level in a way, give you a reference, a guidance about your support level for your FCPO as well. Now, the fifth fundamental factors will be your soybean oil. As I mentioned to you, soybean oil is like a replacement, what we call it as competitors as well. The best oil to replace in the way of crude palm oil. But some of the usage you might not able to replace. But what I meant is really one day we do not have crude palm oil, soybean oil will be the nearest replacement. So when it comes to soybean oil, where can you get the information? Because since many of you, when you look at your indices, you're going to check it out on investing.com. Might as well, if you're going to check for soybean oil itself, we can check through investing.com as well. There are the prices available in investing.com. Now, the second website that you can get this soybean oil is cmegroup.com. This is the world's biggest commodity exchange, which is what we call it as Chicago Mercantile Exchange. Now, why I highlighted this website is because if you are going to know what is this soybean oil through the contract specification itself, you can check it out via cmegroup.com. So once you go in, you can check out on this soybean oil, the contract specification. But if I'm going to give you a shortcut, you don't need to check, then you don't need to go through everything. The easiest way, or what we call it as the laziest way, is you go and check it this. Can you understand plus minus or not? If you change it to percentage, let's say for example, if up by 1%, then you roughly can gauge the market. Down by 1%, then you can know the sentiment of the market itself. So this will give you a reference for your trading. For example, now let's say when we trade FKLI, sometimes you also refer to Dow futures. Even sometimes you trade on stocks, also you refer to Dow futures as well. So this soybean oil futures is something similar to Dow futures. Do we really need to know the contract specification of Dow futures? You don't. Plus minus certain percentage, more or less you can understand. So this will be the easiest way for you. Now, when it comes to soybean oil, the second part that you need to look into it will be your discount and premium. Now, this discount and premium meaning what? Sometimes people tend to look at the mean reversion, meaning if sometimes the premium is getting out of the range itself, we are expecting the premium to be pulled back. And sometimes the discount, if it's way below the mean reversion as well, you're expecting the discount to be pulled back. So in a way, this discount premium is in between soybean oil and also our crude palm oil. So before that, you need to do a conversion. For example, you need to compare apple to apple, because right now your soybean oil and your crude palm oil, they are not apple to apple. One is apple, one is orange. You need to compare by converting their contract specification to be in tandem. Then only you start to compare. So what are the things that you need to compare? For example, your metric tons, you need to convert to pounds, or pounds to metric tons, RM to USD, etc. Then you can have a look. For example, normally the premium for soybean oil towards our crude palm oil is, let's say for example, is 80 to 120. So let's say if it's below that, let's say 60 or 50, then you think that there's a tendency, for example, that soybean oil, the price is going to go higher. Your CPO might be lower, then you can short your CPO, then you buy on your soybean oil. So this is one of the way that you can look into it as well. Then second thing is this, let's say for example, most of the time, I would say most of the time, soybean oil will be at a premium to CPO. It's nothing to do with it because soybean oil is in US, nothing to do with that. It's more towards like soybean oil we can consume directly, but when it comes to crude palm oil, we can't. You still need to refine it, you still need to process it before you can consume. So this costs the premium in a way. But like recent market, you can see that your crude palm oil already in premium. So this is some things that you can take it as a reference as well, which is your discount and premium in between your soybean oil and also your crude palm oil. Now, the last one will be your seasonality. Now, when it comes to seasonality, it's very simple. When it comes to commodities, you can't avoid in terms of the season. Some of the seasons, the production is lower, then you're expecting the CPO prices should be higher. Now, this we grab it from Bloomberg. The source is from Bloomberg. I'm so sorry about you can't really read it, but definitely you can read the green color and the red color. Am I correct? So green color meaning that the particular whole month, the prices is higher. Red color, for that particular whole month, the prices is lower. So the top one, this one is January, February, March, April, all the way until December. This is the month. And the first line, this is the average of 10 years. Then this 2020, 2019, all the way 10 years before that. So if you can really read, you notice that, for example, from August to December, the prices tends to be higher. So especially in December month, technically for the past 10 years normally is green color. So this should give you some ideas about the direction. Might not be accurate, but they'll give you some ideas about it. And this is also in tandem with the low production when it comes to your CPO. So seasonality is something that you can look into it, but unfortunately the source is only from Bloomberg. We can't get it any place for free for you as well. We checked it out, but we couldn't get it for you. Now, the last one we need to solve the question is, what are the challenges that retail traders face with when it comes to fundamental analysis especially? Then should you start with fundamental analysis or should you start with technical analysis? Now, I put it in a very simple layman terms. Give it a thought about it. When it comes to running, let's say, we have full-time runners, full marathon runners. They train for games, competition, Olympics, or even some professional games. For us, let's say we go for marathons, also we compete in the marathon, but we only with the hope that at least we can finish within the allocated time. That's it. We never expect that we can become the winner. The way of training is very different. For example, if you become the full-time marathoners, then maybe you need to train from the morning until the night. But if I'm only train for example, for leisure purposes, I don't need to do that every day. Maybe I run for 1 to 2 hours, then more than sufficient. So when it comes to trading, honestly speaking, for retail or some of you, even if your position is not big enough, your trading capital is not big enough, actually you start with TA, technical analysis, is more than enough. I believe some of you start to laugh, oh, very good, at least, because fundamental is totally nothing for me. But it's actually nothing about that. But subsequently, when your position getting bigger and your trading capital getting bigger, then a combination of TA and FA is a must. But when your position is small and your trading capital is small, you start with TA is totally more than enough. You don't need to do that. Because why? We find that FA is quite challenging for retail, especially. Sometimes you get the information, but you do not know how to make the decision. Decision making when it comes to trading is very important as well. So to make it more easy and for you to kickstart in an easier way, actually technical analysis is more than enough. And if you really follow our YouTube channel or even our Facebook Live, you notice that we even tell you that technical indicator, you don't need to use technical indicators. Even with one indicator itself, it will allow you to make handsome profit. One of the reasons is because futures allow you to trade both way market, both way. Uptrend, downtrend, you also can profit from that. So in short, in summary, we will encourage you to start with TA. Then subsequently, when your position getting bigger, your trading capital getting bigger, then only you should compare or combine TA and FA. You don't need to start with FA. This is more difficult way for you to kickstart, and you can start with TA. Then some of you start to ask me why I'm going to cover this topic since I don't need to. In preparation. First thing is in preparation. Second thing is because many of you requested us to conduct this topic for many times already. That's the reason why we started with this topic. So our session for today, until here, we are going to see you in the next session. Before that, remember to subscribe to our YouTube channel and place on your notification bell. And please remember to like our video. See you in our next session. I'm Ting Ting. Bye bye.